You are listening to ChartingWealth.com for Tuesday, the 8th of December 2015, as we continue to push toward the end of the year. What do we see going on? Well, when we look at the total market as represented by IYY, which is an exchange-traded fund that tracks the total market, we had a two-day trend line that was violated back on the 2nd of December on that two-day candle, and we've since seen the market moving down. We're now forming the first day of a two-day candle that shows a filled red down box following a filled red down box on the 4th of December. So we also crossed over going down on the big chart back on the 7th of December. So we have a confirmed down move in the big charts. Now, when we go back to the 4-hour, the half-day chart, what do we see? Well, it's a confirmed down move there also, where the moving average convergence divergence, or MACD as we call it, crossed over going down in the afternoon of December the 2nd. And we've continued to see a down move. Market bumped up a little bit in the afternoon on Friday, and then has continued to sort of move back in the direction which the big chart was going, which is the way things work. Do you remember back on the 2nd when we told you that we saw a down move occurring at the same time on the small chart, that is the half-day chart, and we saw it occurring on the big chart too? It's a rarity that that happens, but what has happened? Well, the charts have proven themselves out, have they not, my friends? In fact, look at how much the market went down during that 2 days of the 4th, and the kind of nice return you could have had if you took advantage of that. So again, pay attention to what the charts tell you, not the noise you hear from the news media. Follow the charts, not the noise. So confirmed down move on both the big chart and the small chart on the total market. Now let's look at IYY. What do we see there? We see it crossed over on the 30th going down on the big chart. Big down move again on the two-day chart on the 4th. And as of the course of the day, what we see happening is we do have a bit of a green spinning top for the 7th two-day candle, that is December 7, but a few caveats with that. The market was technically down. The S&P 500, which is what SPY represents, was down 0.61% for the day. And if we backtrack a little bit and look at the 4-hour chart, we do see an open red down candle in the morning of the 7th, and then a down candle in the afternoon, still tracking sideways, but well off that up move Friday afternoon. Confirmed down moves since the 2nd of December. Now again, when we go back and we look at the two-day chart, we see it crossing over right around the 2nd of December on the big chart, and we see the small chart, that is the 4-hour chart, crossing over at the same time. When you see the charts parallel, even better sign that you might want to follow that hint. Now let's continue to see what's going on as the market develops. We have been sliding sideways for the last few days after that big down move in the afternoon on December the 3rd. But continue to pay attention. Confirmed down moves on both the big chart and the small chart on SPY. Now let's go to the Qs and look at it first on the two-day chart. The Qs, of course, is the NASDAQ 100. Have a two-day trend line that actually looked like it was probably violated on the 4th, but then the market moved back up through it again throughout the course of this latest two-day candle. So we're going to redraw that trend line and see what it tells us. Right now we have a crossover going down on the Qs actually. The Qs was down 0.45% for the day. Crossed over going down on the 30th, the two-day candle on the 30th. If we backtrack, look at what happened on the 4-hour chart throughout the course of the day, we see that the 4-hour chart moved up pretty substantially on Friday the 4th, and then throughout the course of Monday the 7th, it moved up in the morning and then moved back down some in the afternoon, still in a confirmed down move. It's never crossed back over going up. So you've got a divergence there. The price was moving up. The MACD was continuing to stay down. Well, yes, we went to a higher move, and the MACD did not go to a higher move. So we do have a divergence there. We also have a lessening of the strength of the down move on the derivative oscillator, but it's still in the negative too. So continue to watch the cues. They are curious right now, not attempting to use a lot of alliteration here, but it is a bit of a quandary. Okay, I am. Okay. Let's just continue to watch. We're above the 2-day trend line at this point. Cross back over going down, which may very well happen tomorrow. You might want to think about using that as a potential trigger for entering a trade, since we're already in a down move on both the big chart and the small chart. Now let's range back out to the 2-day chart and take a glance at gold, which was down 1.3% for the day. Didn't affect the fact that we have an up candle, an open green candle moving up, an open box green candle moving up. That is on the 2-day chart. It is above the trend line that it broke back on the 4th of December. And it still, though, has not crossed over going up on the big chart. Let's see how our 4-hour chart continues to play out. Well, it crossed over going up on the 12th, and you would have, I'm sorry, at noon, in the afternoon, actually no, in the morning on the 3rd of December, and continued to move up strong since then, but since has petered off and lost a lot of its upward movement. The morning on Monday started off with a lot of indecision, the afternoon with a down move, and like I said, gold was down 1.3% for the day. We'll continue to watch. Derivative oscillators lost a little bit of its speed, and it looks like we're seeing a convergence of some sort on the MACD and the signal line. So we'll continue to pay attention to that. Again, we don't feel good about our 4-hour trend lines and, well, our 4-hour charts. We were using the 4-hour MACD, and it was so good to us until back on the 12th of November, when it started giving us screwy readings as the market slid sideways and kept going down, even though we had a divergence with the MACD telling us the price should be moving up. So we haven't felt good about that since then. However, before that, boy, was the 4-hour chart a good one for us. Well, all good things can come to an end. And again, when the charts don't tell you what to do, guess what? You don't do anything. You don't get into moves when you don't know which way it's moving. The beautiful thing about being a non-professional trader, an amateur as it were, is that unlike professional traders, they have to trade. You don't. So again, thank you so much for joining us. If you don't know what you're doing with these charts, a couple of things you need to do. You need to sign up for our newsletter, where you will receive, by signing up for our newsletter, our free How to Read a Stock Chart video. You'll get a link to that. Plus, you'll get the layout that you see right here, or if you're watching it on video, that you see if you're listening on audio. You need it anyway, and you can follow along with us. But it is the layout that we use from freestockcharts.com. It's our Charting Wealth layout. We'll send that to you along with the daily rundown that we do and our weekly review and forecast. Thank you so much for joining us. We appreciate you being with us every day. Follow us on Facebook, Twitter, Instagram, and YouTube. We appreciate it. Take care. We will talk to you soon as tomorrow. God bless. Wish you the best in your trading and investing from chartingwealth.com.